Most golden visas cost you money, but these 12 could pay you up to 8.5% every single month. Not only do you earn yield and potentially appreciation, you also walk away with legal residency on top. But local inflation, currency and luxury price floors typically eat into your earnings, so we did the research. In this video, we ranked the 12 countries with highest average rental yields with active residency by investment programs. So you're asking to yourself, where can I buy property, get residency and earn yield? The overlap is smaller than you might expect. Most established golden visas sit in markets yielding 3 to 4% gross. The 12 countries in this video belong to a different group, however, with countrywide gross rental yields above 6% and program routes that turn that purchase into legal status. A bit about the data. The yield figures come from the Global Property Guide, and every percentage is gross and countrywide, which means individual cities can run materially above or below the headline number. The gap matters most where program thresholds force buyers into luxury stock, because these yields almost always compress. We will also call out the real yield, which is gross yield minus local consumer price inflation. In high inflation economies, the two figures diverge sharply, sometimes brutally. A practical note before the countdown. Every property in this video has to do double duty, qualify for residency, and generate cash flow. IMI Real Estate, by the way, has the world's only collection of property listings that qualify specifically for residency or citizenship programs. We'll show you a few during today's video. Starting at number 12, Russia. The countrywide gross yield is 6.5%, with St. Petersburg above average and Moscow below. After accounting for inflation of roughly 6%, the real yield is essentially zero though. Russia Investor Visa offers 3 property tiers. 20 million rubles, around $230,000, qualifies in 11 Far Eastern regions. 25 million covers St. Petersburg and most of the country. 50 million is required for Moscow. Investors receive immediate permanent residency and can apply for citizenship after 5 continuous years, plus a Russian language test. The program has badly underperformed its targets, attracting fewer than 50 investors since launch against an annual goal of 300 to 400. Geopolitical reality has narrowed the applicant pool to CIS and East Asian markets. At number 11, the Bahamas, 6.19% gross, just under 5% real after low inflation. The Bahamas Economic Permanent Residence Program now requires a $1 million property purchase, raised from $750,000 at the start of 2025. 1.5 million qualifies for accelerated processing. Investors receive permanent residency on approval and can apply for naturalization after 10 years, though that process is discretionary and slow. The $1 million floor pushes buyers into higher-end stock, where yields compress below the countrywide average. The territorial tax structure is the appeal. No income tax, no capital gains tax, no inheritance tax, all under an English common law legal framework. Thailand sits at number 10, 6.49% gross, lifted to 6.57% real because Thailand has been in mild deflation. Thailand belongs on this list with a caveat. The long-term resident visa under the wealthy global citizen category requires personal assets of at least $1 million and a $500,000 in Thai government bonds, local companies or property. Real estate is one option among several. The LTR grants 10 years of renewable residency, but no statutory path to permanent residency or citizenship. Foreigners cannot own land outright in Thailand. Property purchases are limited to condominiums, capped at 49% foreign ownership per building or long-term leasehold arrangements. Number 9, Egypt. 6.72% gross looks good until you net out 15% inflation, which drops the real yield to negative 8.5%. This is the second program on the list where consumer prices outrun rents. Egypt's citizenship by investment program requires a $300,000 real estate purchase held for 5 years, delivering immediate citizenship on approval. The full payment must clear through an Egyptian bank account and convert to Egyptian pounds before reaching the seller. At number 8, Saudi Arabia, 6.84% gross, with Jeddah running close to 8% and Riyadh closer to 6%. The Premium Residency Investor Visa requires the purchase of a residential property worth 4 million Saudi riyals, roughly $1.1 million with no mortgage permitted. Government-accredited appraisers certify the value before approval. The reward is immediate permanent residency, typically within a month, with no physical presence requirement at all. There is one practical wrinkle. Saudi Arabia opened its general property market to foreigners in January 2026. Buyers who previously needed premium residency just to access real estate now have other routes. A quick aside, because viewers ask this on every program comparison video. The pathway to citizenship is different in every one of these countries. Some take 5 years, some take 10, some require a language test, some don't exist at all, like in Saudi Arabia. IMI Sovereigns members get access to our citizenship catalogue, which maps the citizenship route through residency for more than 196 countries. Check it out at imidaily.com/IMI Sovereigns. Number 7. Panama. 6.94% gross, lifted to 7.14% real because Panama closed 2025 in mild deflation. As a fully dollarized economy, the real yield in local terms is also the real yield in dollars. The Panama Qualified Investor Permanent Residency grants immediate PR for a $300,000 property purchase. The government scrapped a planned increase to $500,000 in late 2024 and has held the line since. Physical presence is one visit every 2 years. Citizenship becomes available after 5 years for most nationalities, 1 year for Colombians and Salvadorians. Panama also runs a territorial tax system, which means residents pay no tax on foreign-sourced income. Government guidance has steered applicants toward new construction. At number 6, Colombia. 7.01% gross, with Bogota above average. Real yield falls to 1.5% after 5.5% inflation. The Colombia Investor Visa requires a property purchase valued at 350 Colombian monthly minimum wages, which currently works out to around $165,000 depending on the exchange rate. The visa runs 3 years, renewable as long as the investment is held, and only requires 1 day of presence every 6 months. Permanent residency follows after 5. Naturalization follows 5 more years for most nationalities, 1 year for Latin American and Caribbean citizens. Number 5, Turkey. 7.32% gross, with inflation above 30%, the real yield in lira is negative 23.5%. That is the deepest negative on this list. Turkey's Citizenship by Investment program requires a $400,000 property purchase held for 3 years. Tens of thousands of investors have naturalized since the 2017 launch, making this the highest volume CBI program in the world. But our 2025 returns analysis found that while Turkish property prices rose 47% year over year in lira, 39% inflation and roughly 20% lira depreciation against the dollar produced real dollar value declines of 0.5% to almost 9% depending on location. A high gross yield in a depreciating currency does not survive translation into hard currency. For programs like Turkey, where rules and valuation oversight shift quarter to quarter, processing times and policy changes matter as much as the threshold itself. IMI Sovereigns members receive our quarterly private briefings and live processing time data on every CBI program, plus a community chat where members discuss what is actually happening on the ground. At number 4, Georgia. 7.42% gross, 3.12% real after 4% inflation. Georgia's investor visa offers 2 property tiers. A $150,000 purchase raised from $100,000 on March 1, 2026 leads to a 1-year renewable residence permit. $300,000 opens a 5-year permit convertible to indefinite stay. Permanent residency becomes available after 6 years of continuous physical presence, which means at least 3/4 of each year on the ground. Selling the property or letting its appraised value drop below threshold triggers revocation. Agricultural land does not qualify. Number 3, Cambodia. 7.54% gross, 6.24% real. 2 routes apply. The My Second Home program offers a 10-year renewable visa for a $100,000 investment in real estate or a Cambodian business with naturalization eligibility after 5 years. Cambodia's separate Citizenship by Investment program requires either a $245,000 government donation or a $305,000 approved project investment for immediate naturalization. A December 2025 sub-decree may have raised those CBI thresholds substantially. Verify current figures before committing capital. The Cambodian passport carries visa-free access to roughly 56 destinations, none in Europe or North America, and foreigners cannot own land outright without Cambodian citizenship, which is the central wrinkle. At number 2, Costa Rica. 7.8% gross. Costa Rica is currently in deflation of roughly 2%, which lifts the real yield to 9.89%. That is the highest real yield on this entire list. The Costa Rica investor visa requires a $150,000 investment in real estate, movable assets, or a business. The qualifying asset list is unusually broad, extending to empty land, farmland, and even vehicles. Permanent residency follows 3 years of temporary residency, but during that temporary phase you owe at least 180 days of physical presence per year. Citizenship after 7 years requires Spanish fluency and a test on Costa Rican history. Costa Rica is not a low-touch program, but property taxes at 0.25% are among the lowest on the hemisphere. Finally, number 1, the Dominican Republic, 8.53% gross, the highest on this list. Santo Domingo runs 9%. Real yield lands at 3.9% after inflation, however. The Dominican Republic investor visa requires a $200,000 commitment across eligible asset classes, with real estate explicitly on the list. The initial permit is 1 year, renewable in 4-year increments. What makes the DR the most interesting program in this group is the accelerated naturalization track. Investors who hold permanent residency and own qualifying real estate become eligible for citizenship considerably faster than the standard 2-year permanent residency baseline. Latin American and Spanish citizens qualify even faster. Applicants do have to sit through a Spanish language interview before naturalization is granted. The Dominican passport offers visa-free access to roughly 71 destinations, which is below most Caribbean CBI alternatives, but the combination is rare anywhere. The highest gross yield on this list, an accelerated citizenship path, and a low $200,000 entry threshold. If you want to see what qualifying property in the DR actually look like at that price point, those listings are searchable on IMI Real Estate. If the gross yield and citizenship combination on the Dominican Republic caught your attention, there are a few European programs that pair real estate routes with something the DR cannot offer: a potential path to EU residency rights. 3 Balkan countries, Montenegro, Serbia, and Albania, are on accession tracks to the European Union, the former being the closest, and currently offer real estate-based residency programs. We made a video on your screens now covering how to buy in before EU accession reprices these markets. Subscribe and turn on notifications so you don't miss the next one.